Hello traders, welcome to Apex FX. It's Alan right here, and I'm super excited to have you here with me today. In this video, you know how we do it. We're going to have a look at the market and what to expect for the new week, and we'll also be marking up possible entry zones where we can take trades for the week. So if you are new to this channel, kindly click on the subscribe button and turn on post notification so you won't miss out on my subsequent videos. Now if you've done that, let's head straight into the chart. Alright, welcome back. So we're going to start with DXY. Last week was a bit tricky. Most of the week was quite ranging, so it was difficult to trade through last week. But this week, let's see, we may have some better price action based on how the market closed on Friday. We saw some massive impulse to the downside and then to the upside on most of the pairs. So I think we're going to break out of that range and a possible push to the upside or downside depending on the currency you are looking at. But let's jump into the Dixie and see what DXY is looking like. Now this is DXY weekly time frame. The market is still respecting the zone we marked out, the last demand zone we marked out, which is this. Remember, price tapped into it and we saw a massive push to the upside. Now the push to the upside was very heavy, and now we can see as if price is coming back to fill up some imbalance there or something. This is our high. We expected price to push to take this high, but unfortunately we didn't see that high taking. Instead, we see the push to the downside. So from what I can see here, there is possibility that DXY may retrace a bit before going upwards, or possibly even take liquidity below this short-term low that was created here. Maybe we see a dip into this and a push to the upside, but let's confirm this on the lower time frame based on the structures that it is forming there. Now this is the daily time frame DXY. We can see how last week looked like. This is 1 2 3 4 5 6 7 8 9 10, about 11 days of consolidation. That's almost 2 weeks. The market has been in the range, just going up down up down up down up down, building liquidity. Now this is not the perfect time to trade. What we want to see is a breakout, then we can look for possible trades to the upside, because the market is still bullish. If we look at it on the weekly time frame, this structure is still bullish. Market is still making lower highs and lower lows. So having that in mind, we want to see price break out of this range, then we can choose a good direction to trade to. Now what I'm looking at is that price may break out of this range to the downside first, take liquidity out of the range before it continues upwards, or it's even going to break as low as taking out this short-term low which was created here. Now this low, do not forget that it is within this whole price leg. This is the price leg here, from this bottom to this top. This is the price leg. Now this low that was created is inside this price leg, so this is not a strong low, this is a weak low. So there is possibility that that weak low can be taken and be tapped back into this major demand zone before a push to the upside, or maybe just a little break and a push to the upside. Let's see this on the 4 hours time frame. Alright, breaking it to the 4 hours time frame, this is the range here. So let me just take this off since we've spotted the range already, and I will have this off as well. Alright, so what do we have here? We can see that price tapped into a demand zone here, daily demand zone, and we experienced a flip to the upside. So what we're expecting was to see price continue higher, but unfortunately price didn't move higher as it has been in the range. Now we have this price leg here that is from this H4 low down to the top here, which forms the H4 high. So the whole range is within this H4 range. Within this H4 leg, that is where our range is currently. So the market is still bullish based on the structure. We can see here we had a break of structure. This is a low and a high. So as long as price maintains this zone, market is still bullish. Now within our range, there is possibility that price may come back we have an area here first marked up. This is our last unmitigated zone on the H4 after the H4 flip. So there's possibility that market can come back, tap into it, push up, or even as low as taking out this H4 low for just to take out liquidity before pushing upwards. So we can see that market has created somewhat of an equal high here. So there's possibility that after it has finished its duties from down here, that's clearing liquidity, it's going to push to take the liquidity that is resting above that high. The market is quite tricky at the moment, so we just need to take it step by step. Let's see, maybe we have a tap into this zone. If we see some buy opportunities, then we can decide to go long, or we wait for a complete break to take out this, just as we had highlighted on the higher time frame, then we can go long. So these are the two setups that I'll be looking out for within the week to see how it's going to play out. There's nothing so much on the 15 minutes time frame now. Based on these structures we have, there's really nothing much to say today, but let's look at it carefully. Okay, we have an equal high here. Now we're seeing some break of structures to the downside, so what we'll just wait is for clarity. We want to see price break out of this range. A breakout of this range is going to clarify things, and we'll know the right direction to be trading to. But my bias is still bullish on DXY. My bias still remains bullish, and we'll just see how the market develops. So let's move to Euro USD quickly. All right, so on the Euro USD, we're still experiencing we are still in a downtrend overall. This is the weekly time frame. Our trend is still bearish. Now we had a tap into this supply zone and a massive rejection from there. This is just the opposite of DXY, and now we have this bullish candle. This was last week and it closed bullish. Now there's possibility that price is going to push high as well. Maybe we see this to take out this high, then we reverse our back to the downside, or we react off something within this zone. Let's have this deleted. We have something within this zone, then we push to the downside. Now that's the two scenarios that we can see here, just as we have on DXY, the opposite of it. Now let's push it down to the daily time frame to see how the market looks. All right, so here on the daily time frame, there's nothing much to look at. This is just it. We have this zone marked up. Price can either break to take liquidity above this weak high here before a flush to the downside, or we just tap on this inside bar here. This is an inside bar. Yes, we can just tap on the inside bar, then flush to the downside. Now let's drive it down to the 4 hours time frame for clarity. See if we can find some setups for the week. All right, so here on the 4 hours time frame, market is creating some form of equal lows. We had one here, then a new one was created on Friday here. Now these are liquidity pools here, so there's high possibility that market is going to come back for it. So on Friday we began to see a push to the downside, which we expected to sustain the downtrend, but unfortunately upon the tap into this level, price rejected and pushed up again. So now let's look at it carefully. Now H4 has been bullish for a while. We had this flip here, break of structure, another break of structure. This is the price leg in which market has been all through last week. Now this is the demand zone that was created before the break of structure. So yes, price tapped into it a little bit, then pushed up. This barely tapped into it before pushing up. Then price pulled back down to tap into it properly, thereby even taking liquidity below this low here. Pushed, grabbed liquidity, and reversed to the upside. This does not really mean we are completely bullish yet on the 4 hours time frame, because price is still within this H4 leg. I want to see price break out of this leg completely to know the direction to be trading to. So let's see, maybe we have something like this, pull back, then a continuation to the upside. That's really going to clarify what we are seeing here. So on Monday I'm going to sit on the sideline, just watch and see how market develops, then I'll know the direction to trade to. I also have some annotations here that I've explained that already. I said price is still within the H4 leg, and a break will signify the true direction of the markets. So let's push it upwards. Let's see the 15 minutes time frame if there's anything there. All right, so here on the 15 minutes time frame, we're already experiencing some break of structures. We had, excuse me, so we have an M15 break of structure here. Now we have this demand that was created before the bust happened, so price can come back, tap into this bust. This could be a possible setup. Tap into this bust if we see an entry maybe to the upside, but I wouldn't be so keen to take a trade because I can see this supply zone, this H4 supply zone up here. I want to see a clear break of H4 supply zone before I'll be doing anything. But yeah, this could actually happen. We sell back to this point before we push back to the upside, but I would be really careful because of the fact that we are still within the H4 leg. I want to see a clear breakout of that leg before I take any trades. But yeah, here on the 15 minutes time frame, the market is already flipping into a bullish structure. You can see some good break of structures and some zones to support it as well. So let's just watch carefully. Let's allow Monday give us the true direction of the market, then we'll know what to do exactly. Yeah, so that's it on Euro USD. Let's move to GBP USD. GBP USD, we have same thing. We have this zone here. This is our supply zone, tapped into it, and the past 2 weeks have just been pushing to the upside in bits, but in form of indecisions. This on the weekly basis. Let's move it down to the daily basis to see how the market is looking. So here on the daily time frame as well, the market is still overall bearish. We tapped into this zone and we experience a ranging market just the same way DXY was ranging. As you can see here, this is 1 2 3 4 5 6 days. 6 days the market was just within a range. On Friday pushed downwards a bit before reversing back into the range again, thereby clearing liquidity from all the lows in the range. Now let's move it down to the daily time frame. There is nothing really much on the let's move to the 4 hours, as there is nothing much on the daily. All right, so here on the 4 hours I see something very interesting here. Now this push to the downside on Friday actually pushed back to mitigate this H4 zone here. We had this unmitigated zone, price pushed lower, thereby clearing liquidity below these lows here, tapped into that zone, and we can see a massive push to the upside. So since this H4 zone has been respected, there is high possibility that we may see higher prices. Yes, we may see higher prices for a while before the market turns back again. Now let's push back to the daily time frame and see something. Yeah, there is possibility that price may just take the liquidity above this weak high here, then maybe something like this, then it push back to the downside to continue the downtrend. Just same thing we have on Euro USD. Sweep of this liquidity, then a drop to the downside. So bearing that in mind, let's go back to the 4 hours. So 4 hours is still looking bullish. Forget about this break of structure that occurred here. This is not very significant to me at the moment because I see this as inducement. This could possibly be inducement for now, so I won't call it a valid break of structure, except I see a break below this demand zone. If price comes back to break this demand zone, then yeah, I can now see that market is looking bearish. But as long as this zone has been respected and we have a break above these highs, then I'll be looking for longs. I'll be looking for longs until we take out this high. Yeah, be looking for longs until we take out this high. So what do we do now? We have this zone holding on to price. We want to see a clear breakout of that zone, maybe a push to the upside. Upon the retracement, we look for long to tap that zone there. Let's push it to the 15 minutes time frame if there's anything possible that we can trade there. So like I marked here, this is the origin of the move that caused bust. That's why price pushed back to mitigate that. So nothing much here. This is our M15 high and our M15 low. Price is still within that leg. I want to see a breakout of this M15 leg first of all. So I would wait for a break of structure, either to the upside or to the downside, to determine the direction of the market. But for now, I'll still be favoring the upside based on how DXY is looking. We push up a little bit before our sell continuation on the higher time frame takes over. All right, so let's push it down to gold. Gold as well is looking very interesting. Now this is the weekly time frame. We have this demand zone here. Price tapped into it and it has been holding price quite strongly for some weeks now. This is 4 weeks now. Price has failed to really break below that zone. So now let's push it down to the daily time frame to see how it's looking. Here on the daily time frame as well, market tapped into a daily supply, pushed back, but we didn't take our low here. This was our daily low. Price hasn't taken it yet before we saw this massive push to the upside. So if you go down to the 4 hours time frame, there are some setups there. So I'll just push down quick. Let's see what's happening. All right, so here on the daily time 4 hours time frame, we had this demand zone here. Now is it a valid demand? Yes, we had this break of structure here. This is the H4 break of structure. That is the extreme demand. Price tapped into that extreme demand and we had a nice break of structure. Now we had a break of structure here, boom, to the upside. So what we'll be expecting is maybe a retracement back to this zone. Then we have this previously unmitigated zone here where this flip occurred. Price can just tap into it, then reverse and take out these lows that have been created here. This is some form of equal lows I can see here. I'll be expecting these equal lows to come. I'll expect price to push back to take it up, to take it out later. Now if you look here, we have trend line liquidity resting above this zone too. Now this supports why market is pushing up. This could be this is a draw on liquidity. So basically these confluences help us decide that the market is looking bullish on gold. It's looking bullish. Now let's break it down to the 15 minutes time frame to see it clearly. Okay, since we have a short-term bias of bullishness on gold before the sell continuation takes over, let's look at the structure here as well. So this is the 15 minutes time frame. We have our 15 minutes leg here and here. It has been broken above. Now this was the last demand zone that was created before the push that broke structure. So we may see a retracement back into this zone. Then we can expect to go long from here, targeting this high which was marked. Where is it here? Can target this high before a flush to the downside. So I'll be favoring short-term buy on gold for now before our long-term sell takes over again. Except this low here, this H4 low is taken out. That's where my bias is going to shift again, but for now the market is looking bullish, so I will just stick to looking for longs for the next few days or few weeks. It all depends on how fast the market moves. All right, so that's it on gold. Let's move straight to US oil. All right, US oil as well. This is a monthly zone. Price tapped into this monthly demand zone here, tapped into it very lightly. Then we had this massive bullish candle which occurred 3 weeks ago. 2 weeks ago closed as a rejection from this supply zone here, and last week closed as an indecision. So let's move it down to daily time frame to see how it looks, if there's anything juicy there. Okay, so here on the daily time frame, the market is looking quite juicy. We had a push, took liquidity from this low, thereby tapping into this monthly zone. Then a massive rally to the upside, broke structure. Now this is the other block that was created before the break of structure. We have some other levels here, that's why price reacted from there, but now price came back, tapped into this zone, and we can see some form of rejection from this zone. Now will this rejection be sustained? Let's see on the 4 hours time frame. All right, so let's study the structure that the 4 hours time frame is giving us. Okay, so so far so good. The 4 hours time frame has been bearish, as we've been seeing lower highs and lower lows here, thereby coming to tap into this zone. Last week we had a push to the upside, but price didn't close above that, so this is more like a V-shaped recovery. Price just tapped it. It looks more like a liquidity grab. That's a liquidity grab, a V-shaped recovery. So there's high possibility that price may still push back lower. Now, why do I favor price pushing back one more time? Because I have this imbalance here, and this is a draw on liquidity. So we may see a drop from this zone into this zone before a push to the upside. And also the structure is bearish here on 4 hours time frame, so we'll be looking for shorts as long as these lower highs and lower lows keeps forming. Now we are only going to shift to long if our H4 high is broken. So if we see, let's say, a break of this high upon the retracement, we can now look for longs, but so far the structure is bearish here on H4. It's bearish here on H4, so we can keep looking for shorts. Now let's go to the 15 minutes time frame. I have a very nice setup here. All right, so here on the 15 minutes time frame, price tapped into this zone, then we experience this massive push to the upside. This is our previous M15 high and low. Price broke below it, above it rather, and we had these swings that were formed. So clearly this was our last M15 low and M15 high. Now price tapped into that zone, we had that V-shaped recovery, then a break of structure. Now whenever there's a V-shaped recovery, it shows you the true intent of the market. In this case now, it's how will I put it, it's just trying to explain that that direction that the market pushed in the first place is not actually the direction it wants to go. It's just a grab on liquidity or something. So basically, yeah, it shows you the intent of the market. So we had this V-shaped recovery, break of structure to the downside. Price pushed up a bit. We had this rally to the downside, but we had some sort of liquidity here, so I'll take this as an inducement setup. Yes, this is clear inducement. This was the last supply zone that was created before the break of structure, so price came back, tapped into it. Based on my entry model, I actually see some reasons why price came here. This is where orders were actually generated. We had some of my criteria that were met here. That's why I marked this zone up. You can see price tapped into it lightly and it pushed to the downside. So there's high possibility that price may still come back to mitigate it, maybe one more time, then a sell off to the downside. That's what I'm going to be favoring, or possibly we just range breakouts or even a little bit and drop to the downside. But above all, I'm going to be looking for short opportunities back into this zone or even lower to fill up that imbalance that we have there. So this is the setup I have here on US oil. It looks very, very juicy. This is a very nice setup. Yeah, also we have this trend line liquidity here. This is also a drawn liquidity, so we can expect lower prices. If we break this down to the 5 minutes time frame, you see some very nice setups, entries as well. So yeah, this is it on US oil for today. We'll see how the market develops, but at the same time, I implore everyone to be patient based on how the market has been in the past 2 weeks, especially Euro USD, GBP USD. We want to see a clear break of those structures we have marked up, the 4-hour structures, to help us determine the right direction of the market. So until we see again, guys, stay safe, and I wish you good luck and good trading.